Okay. So I guess I'll just start with some of the updates that we talked about. We talked about Lido in the channel today. We gave a good signal here on Lido because we are interested in alts based on the timing of the larger cycle narrative as well as Bitcoin dominant seeming exhausted as well, plus general trade location. So we are also looking at alts as well as we're reloading into some of these positions here. This was a nice, obvious double bottom. I mean, this hit right to the T, right on this zone. I mean, you really just can't get any better than that on that one. And we have a huge move. We're talking like $1.50 up to about 270. So it's a pretty good move there. Not quite 100% if we got to three, but we're getting, we're getting close. And so we talked about if you missed this double bottom, right? You had a chance. Now I almost called it a pullback continuation, but I didn't really. I changed what I classified the pattern as because I would say if it was right here, see there was a recency of this momentum, then you would have a pullback continuation pattern in play, right? Bam, right? This one is almost like the momentum's died down and now it's been 3 days down and this thing could just be a balance, right? It could have another day where it goes down. And then I just said, hey, if it comes down anywhere close to this zone in yellow here, especially if it hits the POC and the moving averages, right? That would be a great reload anywhere in that general area. Got close enough, right? There's no perfect in trading. It didn't get quite in there, but that's just to be alert of. There would probably be another entry as well as tomorrow. This will just be like a tight doji, but you can see this is already starting to form almost kind of a balance here. We had a zero line reject as well, which was giving us a hint to get in. So that was that. This Lido has been a really good reload for us recently. Bitcoin, in terms of the day trading, it's been the frequency's been less because I just think there's um less of an edge now because we are so close to the top of this resistance zone where we just experience a lot of chop. Now, if it's coming back into the recent intermediate term uptrend, right? This was a trade that we gave in the channel here. And what's good about this is because this had such good trade location, I am not jonesing that I didn't, you know, catch a trade at 4 a.m. last night or put in a resting order at that zone, which was yesterday's lows, which I'll show you. And I'm not doing anything crazy like trying to just do something fancy and get in anywhere just because I missed a move. So that's that power of that choice that having a runner in the market can give you. And I'm not even as interested as in Bitcoin as I have been recently in Ethereum, which was a good call. We said, hey, Ethereum has more room to go because it's lagging in Bitcoin. Also, we just knew there was news ahead about an ETF, right? Why not? Right? It hasn't broken its all-time highs yet, but Bitcoin has. It's just behind. So this huge move happened. Somebody bought something, right? So, um, and the other thing too is that this thing broke, right? Pullback continuation would be here, right? Now there's no more pullback continuation because the momentum died. What's probably going to happen is that if this thing has broken above this structure here, right? This is a giant balance. It's not like this went into this and now is below it, right? This is above it, right? So that's good. That's what we want. Now, this doesn't mean this can't just form a giant balance here and we get something where it tests the lows of here, which would form, or even, a little deeper as this matures. Like that's when the pullback, now this is just going into potentially a new phase, but just imagining different scenarios, worst case, best case, where we're going from here. Now, where were some other big winners just as a review? There was a big move today. This wasn't a coin that I was in, but there was a member in the room that alerted us to it a while ago, right here. STG. So, I mean, this is just one of those things where it's like, you don't know when these things pump, but if you can get in early on these low risk potentials, whether you're DCing at a good zone or you're just holding a few runners, right? Depending on where you are and what your position size is and what your goal is with it. right? This is where you want to be. So I'm just doing a little quick market review here, right? LCX less attractive. Guys, as I'm just looking at these charts, if you have any questions, feel free to jump in. All right, well, we'll
Yeah,
just
I just wanted to say thanks for covering Ethereum, Kobe. It's a good thing to have it as well mapped out by both of you guys.
You're welcome.
yeah, I think Ethereum is going to do some exciting things. I mean, it's that pumping is going to pump all the other layer twos as well, the whole ecosystem. And we just remember the different phases of what the markets can do. Um, just as an example. Yeah, so it's like if we could zoom out, right? Like we talk about how markets they don't just go steep up or steep down, right? They go in these different phases and they have these time-based patterns and cycles that are not intuitive to the human when they're under duress or when there's a heightened sense of urgency because of moves and so on. And also that even if there's principles which our system outlays very clearly, which with rules in place, uh, you know, they're principles in a place that stack edges on one thing, but one attribute, like you could have a 6 leg count on something. Well, we know how some of these micro caps pumps. I mean, we remember what Solana did. I mean, that's just completely irrational. But does that mean that the fifth and sixth leg count should, when you get up to that level, you shouldn't take profits or something? No, no. But that's the hard thing is that when principles are stacked, enough of them, enough of the time in your favor, that's how you're going to make a lot of money. It's just very hard to think counterintuitively in that way. So what most people rely on really is not consistent income from the markets, but rather getting income from some outside way, and then they DCA, which is fine because I'm giving DCA signals for those guys too, and I also hold in stake too because I think many weights lead to Rome, because we all know we're in markets they really can pump 10x, 20x uh, in these ecosystems. But at the same time, you shouldn't your belief in that, or even you zooming out into those time frame cycles, which we can do when we go to the weekly real quick. It shouldn't it shouldn't obfuscate from the fact that you cannot um, extract consistent wealth from the market without doing risk averse principles, because you have to have access to your capital pretty much at all moments and all trade ideas. So basically, the short-term income producing trader has to be extremely resilient, right? Resilient in the face of obstacles. While a DCA guy may not be able to handle that stress, so their psychology is they almost become faith-based but religious in their other tools they use to, uh, you know, do an anti or a martingale strategy rather. So I think we're in the cycle where that will pan out, but most of the time in every other cycle, the DCA guys are not doing well. It just is what it is. But where the two strategies can align is at quote major turning points, right? A major turning point, a trader and an investor are going to be very much interested in the same patterns. Hang on one second. I gotta get my dogs out of here. Sorry about that, a little loud there. But let me go to Bitcoin here, right? So, right, we have this triangle squeeze breakout, possible triangle squeeze breakout, but we're going to need to see some initiative activity to the upside, right? Coming back, pausing, pulling back, that's fine. What I do like about it is this stochastic cross that I've been waiting for quite some time. But once again, this indicator is lagging because if I waited for the cross, which was right here, why wouldn't I have taken a shot here at the moving average? See, that's the fade setup. When you fade against price action, you're using other things because you're going against price. Trade location was an edge there, moving average. You had extreme oversold conditions and so on with the CCI, right? But it wasn't confirming this. So it's almost like the CCI gives almost like by the day what's oversold. And the stochastic RSI almost confirms a potential trend in the making, whatever. And out of all the indicators, I probably understand the stochastics the least from the inside out. Like, but you don't have to understand them 100% in order to make money from them and how to use them. Just depends on how deep you want to go. Like a lot of people use fib ratios, but they don't really understand, what the golden ratio is and how it's derived. It's just the ratio between the two consecutive numbers in a Fibonacci sequence, and you can get into it. It's interesting, right? It depends how deep you want to get, but I would say what I see a lot of traders mistake is they try to take in way too many tools rather than just master a good amount of set of tools that they have. I don't have Ichimoto's and anything on here, but just to get back on topic, let's see if other markets are having this cross as well, right? Also, Ethereum, right? You would expect it, right? But I gave the signal to get in on the weekly for the Ethereum trade. It was either this week or that it was somewhere here on the bottom because that's what we do. We are fading against price when it's looking most bearish, and we're selling when it looks the most bullish. Now, obviously, right, there is a pattern in play here, right? There's a balance. Now, it either continues to balance or becomes a bounce breakout. And there's different. We'll get into what the odds are for those. And we have to look at how price gets there, what the leg count is, what the conviction is. I mean, this is obviously right here in 1 week, some giant ETF hedge fund, huge amount of buying took place. This was institutional. I mean, this was just look at all the weeks it took to get here and then in 1 week. So, and then, right, you'd expect a rest, but look how shallow this week is. This is also very bullish. Also, right, although this had very strong momentum and you could see this initiative to the upside, which you would then expect, right? Some oversold signals. It's not like it's gone a huge amount up. It hasn't, blue has not even crossed up here yet, right? We haven't, so there's, so looking at all that in context, this is looking more to me, and we have to see this is ongoing, is this is brewing up to be a bounce breakout pattern than it is to be basically a failure here and then a continuing of the bounce extending. So far, based on this momentum cross, the way prices got there, shallow pullback, strength of this candle, how much data this took out. What would be even more unexpected is if this week closed with another giant green candle, because just not, it's rare to have two pure trend days in a row. It's very statistically rare to have two pure trend weeks in a row, even more so. So we'd expect a pause there, but a very shallow pause is very good. So let me just check real quick and see who's in the room. Okay, we'll go down time frame now. Yeah, you see that's a great pullback continuation. I don't know, did anybody take that? If you didn't, I mean, maybe Lido's not a coin. I mean, it just makes nice patterns. I mean, really clear. This was a wide, super wide double bottom, pullback continuation, right? This was just basically pulling back into this good support zone. Now potentially forming a more of a bigger balance and maybe even breaking out. So let's see what else we got. Now here's another not a deep in, but a real world asset. It's going to be basically tokenizing physical assets, land grants, and so on, governments contracts, and it's had some really good movements. These were two areas I said, hey, double bottom retouch. I mean, if you got in at 7 cents and you held this up anywhere up here, you're very happy. This was quite a run. So it's like, well, I mean, was it done? No, but I mean, one leg, two leg, three legs down, you can see a fib retrace. I don't even have to do it from here to here. It's about 50%. When things are half off, people want to buy. This got up to about 30 cents. Yep, just by eyeing it, half off. Now, timing is everything. You shouldn't expect that it bought here. Now, all of a sudden, this is going to be the low, or it could. This is now going to just go straight up, right? These things will take time to mature when they have huge runs up, because it seems to be that steep up markets do not last as long as sideways markets, because, right, just as even on smaller time frames, most of the time the markets are going sideways because most of the time people are agreeing on price at markets, because that's what markets mostly do, is they facilitate trade. So most of the time they're not rejecting price, they're agreeing on price. So here people were rejecting price, right? And then they are now agreeing on price here. They're going sideways. So most of the time they're going to, now of course it's going sideways down, but now this is a big phase. So, right. So we had a double bottom here, possible retest. And now once again, creeping up pullback, potential continuation to retest these highs. I didn't give this one as a signal today just because these were the better ones. I'm also staking this as well. This was an Elon Trades coin that they got me into way back in the day. But like, well, I'm just giving pure technicals on how to reload and get in on this, and even giving like, I know some people just hold through my, hey, take half off, move stop or break even, but at least I did that for a lot of these for folks that wanted like coins I'm not even investing in. But I will just say, I'm getting you into pure technicals, but if you take signals based on other channels, a lot of them, I'm not, a lot of them are just like, hey, there's a news event coming out, and I think it can go to $2 because of this. It's like, wow, well, you, you know, it's based on belief, really, because there's more purity in these charts and data, because we're just looking at behavior patterns of large aggregates of people that can't lie. But, you know, a news event at the end of November going against all the signs that things are rolling sold didn't really matter, right? So we try to avoid that. That being said, right, a lot of these products, like we'll go to Theta now, for example, that's a deep pin where they're going to decentralize physical infrastructure. We'll go check that out real quick. And what I mean by that is, let me just grab it real quick. The physical infrastructures that serve, these live streams, these YouTube feeds, and the internet itself are physical places with people that run them and giant blah blah blah. But basically now they're going to if you tap into the Theta network, anyone with an iPhone or a computer or a PS whatever PlayStation can create the same thing without the physical needs, which is super cheaper, and with the network technology, it's quicker, cheaper, and faster and more efficient, and you get paid to do it. So it's like going to basically destroy that old system. But this whole decentralized thing, Bitcoin's decentralized. So it's this whole, I like those narratives of the decentralized deep physical infrastructures, which BlackRock is getting involved in. And I also like the real world asset tokenization, basically opening up investment projects that, the small guys could never get into before. Like, if you want to invest in castles and giant real estate and, $10 million paintings because they hold their value, now you can tokenize that $10 million painting and you could buy a share for $10 and buy how many shares you want. So it's opening up markets now to more folks. I like that. But we still need a lot of capital, and I just keep reminding myself, it's like, well, the retail pumped it last time. Retail's asleep. Now maybe they'll really wake up with, because remember last cycle in 2019, Donald Trump saying that he did not even like Bitcoin. He thinks this whole crypto thing is a scam. Blah, blah, blah. And now this time, like I said, he posted a new channel. He's completely going, pro crypto. I was like, wow. I don't vote for rulers, but that's making it pretty good if he could keep that promise, because that gives you something that directly affects uh, everything I'm doing and we're doing here. So, but you could see here, this also had a really good run. It tends to mirror Bitcoin. I've been talking about how there's a giant pattern potentially in play here where, this could be a huge retest of this potential triangle breakout. We have a VPOC here as well, right? And we know that the longer VPOCs go sideways, the greater the potential trend out of them. And hang on one second. I just got to grab this real quick. Japanese chins, they are a very docile breed at times, but they're extreme, really wild. Two brothers, wild guys. Okay, so the pattern that you adjust these things and they change, but pretty much a VPOC here as well. See if I can get that back. In other words, right, multiple touch points, trends usually start from VPOCs, and now we're up into another VPOC that we broke above and have now pulled back into and made a double bottom. I think we're going to have a potentially large move out of here that retests up here. If we could break this balance, right, then we have a balance breakout pattern, right, where this POC will be the next target, but this is the potential uh, zone again, right? And I think the run this made last run was about $16. The crazy thing is that this market just and what moves it is not based on the at least right now the utility of the technology involved, because this one would have went way past a lot of ones like Dogecoin and so on. Of course, the partnerships and so on, but we'll see. Fully disclosed, yeah, I'm a huge believer in this one, in its fundamentals and its tech. But you don't have to trade on belief. You have to invest somewhat on it if you go with a narrative with that potential, but that's okay. We look at other things in many ways lead to Rome. Um, right here was the bottom building at say that we gave. I think it was around here, this level. Nice move up, so that was an exit. We had a reload, but even if you're just DCing, like I know some guys are, you're still above water here. You could make a move, or if you want to hold through it, do what you want to do. But to me, this is making this is bottom building still, right? I have to take a look at the weekly and look at the momentum of this, but it seems to be bottom building. Multiple bottom buildings. We'll go to SWE real quick. We'll take a look at that as well. Yep. Around $1 still. And the other narrative I'm following and I've got involved in is the AI narrative. We'll go take a look at Tau. So yeah, I mean, basically, so oscillating around a POC, right? This one right here. This is the bigger POC, so it's going to drop, but there still is one here. Not as clean as the other ones, right? So I'm going to hold off on giving any positions on that, but it is the bleeding is paused based on this candlestick pattern as well, coming into some moving averages. with the zero line reject, so we could see what tomorrow. I wouldn't be surprised if we could get a sideways up. It's just not clean, and you want to have some beauty in the market, right, Kobe?
Yeah, I think that this hits an absolute core statement. Um, if I would lately not trade only the absolute most attractive signals completely independent of whether I like that market or whether whatever personal reasons, because it's it's easy to fall in love with a story. It's easy to fall in love with something that you don't own yet. It's easy to be in love with something that you do own. It's easy to be making mistakes with something that you own or with something that you had a lot of losses in. So the, getting this emotional side away and um, having only favoritism in regards to beauty. I trade ultimate beauty. I'll give you an example. I didn't post these signals, but I'll show because you had LTO before. Let me get that chart of mine. Maybe you can, if it's not too much asked, I put this in the blue channel, but if you maybe can even bring it up to your screen, that would be great. Last chart in the blue channel. Awesome. Thank you so much. Okay, guys, this is this is ultimate beauty. And I'll walk you through this thing. It's the same chart that you just looked at before, maybe. No, it's okay. The only thing that's a little bit different is Matthew had that channel in yellow. This is LTO daily. And I extended that upper line to that breakout. He had this stop a little earlier. Now, just for repetition is the mother of skills, and maybe in between is something that you haven't heard yet. I'm not interested in this upper part. See how beardy this is, especially at the 30 cents level. Lots of rejections, and but the channel is very clean, and I do not make channels as most do. I mean, I do that too, but maybe 90% of my channels is parallels. So I take the line that's clean, I copy that line, I make a clone, and then I move it to the other side of the channel. If the channel is already not very clean, I'm already not interested in it because I want beauty. A clean channel is, and you see me all the time, all day long, change my charts, change my angles of these channels. It's a process to not have a fixation on um, where things go, but basically just follow what the market does, and if it represents something that I find attractive, then I'm in. So I was the same interested than Matthew was in these extended moves. It's always nice if you catch a runner that can really produce something. We had, as he correctly stated, exactly this 50% retracement, or almost pretty close. And so that's why I start getting interested. So when you look at that channel and you look at the last touch point before we have these 5 green candles in a row up, this is where I get interested because of Fibonacci. The next thing I get interested is see how as soon as we reach the other side of the channel, um, we we don't retrace anymore. We just get glued like a magnet to that upper line. all that means is that people are not willing to give up their shares anymore. So if I see channel behavior like this, if you look a little earlier to the channel, all these beards, right? Especially that second part of that double, basically that double top, where we have these two channel touches with long wicks to the side, and that second one is this reaches all throughout the whole channel. Not interested. But as soon as we have 2, 4, 6, 8 days glued, and it gets rejected, but there's no follow through. It's basically a small channel within a channel, if you would imagine yourself a second line in there. And this is where I'm like, okay, I'm interested. And then check at that level of where I made that right double bottom. That's basically a daily setup for a weekly entry, while we typically do the 60-minute setup for a daily. So this here would be the entry time frame for a weekly chart. And see how clean this is. We built that green doji right at that level. Again, we either do bodies or wicks. In this case, we don't expect this to go far down. So I actually had a limit order, got filled on that doji already. And see the substantiating VWAP to the right? That's like the third highest mountain tip of that whole chart being representing. So that's the first opportunity where you can get into this move, is that green doji on the right-hand side of the horizontal white line. Then you see a small bar the next day where this gets rejected. If you go, and this might be a good homework to just go through these things, to the 60-minute chart, you see a nice double top, double bottom to enter there, because the daily call, obviously, after that green doji would have been sideways to up. So we're looking now for 60-minute double bottoms. I took that one as well as a reload, or if you didn't catch that first one, that would be a perfectly fine, very low risk, exactly. Thank you for guiding us, Matthew. And then we get the reward. Bob, right after that entry, this thing jolts up the next day. By the way, it already jolts up after the double bottom, and here we're penetrating. I wouldn't say penetrate, but we have a trend day. So the next call is a sideways day, right? We have an action day. We expect a pause day. But this is a pause day where we have very high likelihood, this being the 1, 2, 3, 4, fifth time that we're attacking this upper white down channel line for a possible breakout. Because now we have stacked that we have a white double bottom on daily. We have a glued on the top line. We have a Fibonacci level on daily. And we have a trend day that is not rejected. This is the first day, first time ever in the whole channel history that we are closing at or slightly above that channel. Then the next thing is, and I know all these trades, so you can quote me on that. Just go to the 60-minute chart of these things, and you will see on that sideways day, on that pause day, is a brilliant re-entry again. A very nice action reaction, white double, not white, but 4-bar double bottom on 60, and we get rewarded again. Two days continuation up. There is 2 more reload entries that I don't know off of hand in that whole leg up. Then we're moving all the way to 23. And this is substantial moves. This might on that chart look harmless. But if you have an entry below 17 was our first one, and it goes to 23, that's a 5-cent move on a 17-cent stock and crypto. And that's, for me, I know that Matthew is already very cool, like, oh, this is not quite 100% move yet, being getting used basically to these crypto moves. But I'm coming from a world of this super conservative trading where hedge fund managers basically got the crystal boxes sent to each other if they just made 5% more, 5% plus per year. And this was the 7th percentile of all hedge fund managers as a whole. So if I have a 5% move, let alone in this case a 27% move in a few days, I'm exhilarated. This thing is not thinly traded. You can pound in this thing quite some size in and still can count on your stops. That being said, where we're trading now, I took this double bottom today. Maybe not that clear on that chart size-wise, but this small sideways horizontal bar is actually exactly the same lows. And those two white circles are indicating beauty principle, meaning that distance to the 20 moving average from the lows of that long green bar to the left around circle versus to today's dojis is the same. And if you look at the 60-minute chart today, um, again, it was a present. This thing is clean, trading so clean. It's perverse. Like you have stops in the subcent level. It's just it's a present. Um, so what I'm trying to say is this is a very good example of Matthew's principle that he just shouted over to me and said, correct, absolutely correct, essentially correct. So important in today's trading. I mean, if you're looking around, if you don't watch yourself, you find yourself in sharp, wide stop behavior, beards, megaphones, whatever else you can very quickly accumulate um, larger losses. And why? Because even if your system should sustain more losses, the biggest drainage on this whole thing, and this is especially important because summer doldrums are coming up. And even so, everybody talks, we won't have summer doldrums this year. Yeah, well, people might not go to Europe on vacation, but typically traders make, at least professionals make a pretty good living, so they at least have some staycation, meaning the kids are home from school and there is just less action Jackson going on. I would be very surprised if we just, from a volume perspective, drive through the summer as a regular. We might have interesting sectors like the ones we're picking, where crypto might be staying active and metals might stay active. But as a whole, it's definitely a time to be more careful, trading less size. And as Matthew wisely noted, um, pick your spots. Pick your spots, or not just spots, pick your time of day, pick your challenge, pick your uh, just like he did when we make these reviews. That's nothing else than prepping for the next day. That's the first prep for a daily call. Is what looks attractive, what looks clean, what looks harmonious in its swings, what has less beards, who is like before the red channel I posted. The most attractive at that point when we were done with the doldrums was Ethereum. Now, of course, the picture has completely changed because everything got a weak hand right after. So all these setups are goners now. But that's what you need to do. You need to give yourself a little bit of a universe. Obviously, it has to be to the extent that you can manage that, depending on your trading expertise. But don't insist like, "Oh, okay, Ethereum is great, now I'm trading Ethereum," or I still need to get this and this and this for my portfolio. No, that's not how it works. And also very smartly pointed out from Matthew, and don't just do the fool's game of, oh, okay, if I don't have a nice entry, then I double up because this thing is nicely going against me. And this martingale stuff, it is not working out long term for nobody. And statistics, you can't beat that. I mean, I know that there's a lot of people who whatever just compound into their holdings, but uh, to be in this illusion that nothing bad can happen, no matter how nice the story is, or to crypto as a whole, um, is just naive, in my opinion, because all it takes is one massive blow. And if it doesn't wipe out your account, it certainly wipes out your confidence. And that can take a very long time. And I've met people who lost their confidence forever. That's it. The game is over because you don't walk away from something if it's for you too big to handle. If you start comparing these things, where you say, wow, this was only 8 seconds and I lost a house. And it's just overwhelming to you to that level where you say, I just gambled a house away in 8 seconds. The sticks, because these things get anchored in your brain, and each time when you basically are just a little bit worried, that example pops back up and you literally are physically unable to push that button, even if it's just for a couple shares. You just can't. And reconditioning and programming these things is for some illusory. You never get there. So trade modest sizes, pick your spots. Don't get emotionally involved with anything really. And if you read through all these trader books, it goes both ways. You can get emotionally involved because you're on a winning streak. I, for example, find it absolutely ludicrous of what they do in the regular trading world, where they have these kids and they push them for trading breakouts on news rights at the open. And when these kids have runs and have a high confidence, they pumping them to add size. If I'm on a run, I start reducing size, because just from a probability perspective, if you're having 15 winners in a row, you take it easy. It's fine. You had 15 winners in a row. This green and this push and this, it's never. And of course, there is rare exceptions to very specific personalities. So I speak a little generalized, but I think where the generalization becomes principle based is a risk averse trading approach, where you consistently take profits to the quad exit on financing and eliminate risk in a very short time frame and in a very reasonable risk reward ratio. It has already so much built in that you have a good chance to succeed, that I'm asking myself, why would anybody, regardless of personal profile, risk to 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 mitigate that edge? Why? That must be scarcity thinking. There is no need for anything really. The only need that you have as a trader is consistency. The rest is just size or frequency. And it's emotions, because what if it takes a week longer, or a year longer, or 5 years longer to whatever your goal setting is for whatever you want to. And if it's something emotional of higher, wider, faster, then it's already not principle based. So I know that to many, maybe I sound like this old fart who is too conservative, but I'm very proud uh, that I have consistency, and I protect it. This is the holy grail to me. When somebody asks what's the holy grail, consistency. The real holy grail is consistency. In Matthew's advice to trade beauty, to trade the attractive spots, and to look at charts that way of how he presented today, where he just says, oh, and here's an opportunity, and here, and then identify, oh, like he did in LTO, that this is a very clean candidate. This is a beauty. And these things start going away. This is nice at 18, and there's obviously a lot of amateur traders in this thing still, while simple TA basically still works so nicely, once these things are more out there, typically you don't get these presents as easy anymore. And to take the gifts. There's a lot of people who start doubting trades because they look too good. Don't ever do that. Don't ever do that. Beauty is the ultimate. If you're looking outside, whether you do this on, let's say, love based things of how we uh, are attracted to, let's say, women, it's these typical ratios between lips, chin, and nose, at a certain eye width, where you just like where it starts to clicking. So that's nothing else than a different form of a Fibonacci. That's mm, these things are all present in nature, and training, being fascinated by a certain homogeneous approach of whatever edge you might be picking, is definitely for training something that's working, because that's where my main focus is, and develop these own beauty principle tools that you already know apart from. So thank you, Matthew, for pointing that out. And here were a few examples. And I encourage you, go to that 60 minutes, and you'd be surprised of how the market offers here a very abundant way of getting you rewarded with a fairly easy way of identifying daily calls here. Thank you, Matthew.
Yeah, thank you. Yeah, it's funny how the when when the charts are looking really good, not that you would need to, like the narratives are actually working well. So you don't necessarily even would need to follow both. But it is nice to know that that project does have some governments and say what you want about it, the United Nations and big things that could potentially pump it or whatever. But the founder in the channel at least alleges that he's getting involved to make governments more transparent with the public. Basically, the whole let's make let's make everything they do public, but private, make the things that we should no one should see, like bank accounts, private or whatever. So that's what it does. Um, we'll see. We'll see. So let's see, guys. Let's see who's in the room. Do you guys have any questions about any trades you took or anything in the channel, or any coins you want us to cover?
Well, the difficulty that I encountered sometimes is like to be able to pull the trigger as per these intricate relations that you guys have almost automatic in your imaginations. I like the explanation that was given to a question by Horacio with regards, I guess it was like XPR, if I'm not wrong.
Yep.
And
Proton, yep.
it was very interesting to see how previous ways that I mean, like the explanation by Corey was really astonishing in the way that, okay, look at the way that this price action pierces the 40 moving average and then retraces back to take off. And then he presented two previous examples, and it was like a copycat out of those, and it was I would appreciate it if every so often, and if it's not too much to ask, you guys decompose, break down one of your trades in that way, because it was like, okay, the stacking of odds, all the principles that you guys highlight. And you had previous the beauty principle, the Fibonacci retracement, the triangle composition on the daily time frame, the compressed triangle. That's what I meant. I mean, I could listen, and for example, like I'm not like I try to follow these signals too, to actually like to see what is the logic behind, as to not jump on the gun. And one of the things that I realize is that the resting order is not something, it's not a level precise. It kind of like, you gotta perhaps like spread it out a little bit, so then you catch the market in your setup trap, like somehow like hunting, right? It's okay, if the animal, if the prey is gonna step over here, well, there is your trap there. But if it decides to deviate, well, it's nearby, but it's aiming to that zone. It's kind of like projecting the price action, because sometimes I get stressed out, like oh, how come this signal is not is not taking off 5 minutes after it's posted, and it takes its time. And then I kind of like get discouraged because I don't know what is the criteria. So yeah, that's kind of like my comment to what's some of your signals.
Okay.
One, sorry, did I interrupt you, Matthew?
No,
Did you, do you want me to go first?
I didn't say. I think someone else said something.
Okay, gotcha. One thing that helps with this is that your mind is programmed more to see finished signals than developing ones. So I have a journal, a digital journal, where I consistently, under different categories of how I, like for example, I'm developing something right now that's called tabletop, or that's a specific representation on line charts for turning points in cutting prismatically through turning points. And what I do is I make screenshots of a chart when there's the entry. So I go back, it's a backtesting thing, or you can do it in real time too. If you, but maybe in this case you shouldn't. Maybe you should just start out with backtesting. And I make basically hundreds of screenshots of the entry scenario, or the entries, or right before the entry scenario. So it depends on what time frame it is. Let's say if it's a 60-minute chart, it's 5 minutes before entry. So something where I need to start being very focused for execution coming up. And you'd be surprised of how different all these signals look at the time right before entry versus when you afterwards go and say, it's a serial line reject, this is a Vegas, this is a sling pattern, here's the oversold, whatever. And it is exactly that time delay that you learn about, meaning, that you said earlier, difference between stochastics and CCI. CCI is a leading indicator. So it is correct. This is to be, depending on the time frame, used as an advancement indicator, while the stochastic is confirming, which is only logical because stochastics is a derivative basically of averages in regards to a trend. So stochastic helps you to see how much room is left. So when we are in this oversold state of that one chart that you showed us, it shows potentiality, but it's not a good entry timing tool. It just shows, listen, if this thing is running, we'll have a nice way to go. While the CCI is a momentum indicator, and in this case, it can be used as a leading one. It shows you what's about to happen. So, as I said, the best way, because I don't know what tools you use and what your setups are and whatever, but If you just prioritize your trades as class A and class B, and then use the tools that you're most comfortable with, and then use the setups that you're most attracted to, and then create for yourself a picture book of hundreds of these setups of how they look like before your entry, if that's because it seemed like it was an execution uh, debate. I didn't want to call it a problem. Then you will find that you can restructure your brain of not, because that's the great hindsight bias that you get basically with every educational tool that's out there. All these educators, let's not forget that 98% of those are just failed traders who had to come up with something to make a living. Um, they show you all this stuff after the fact. Oh, and here we're in because oh here that was great, and here we have they leave the losers out. The whole structure of you rarely get the oh, but it doesn't work out, or when it doesn't work out, or why it doesn't work out. You just get like, this is great, this is great. I'll show you here the triple moving average cross. Oh, the golden cross. Oh, this is marvelous, 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 marvelous. And after the fact. But as Farley once named it, a very awful person, but very straight up educator. I think it was called the hard right edge. He did exactly that, the hard right edge, where he which says, well, this is how this looks like. But I know, and he said that straight to the students in the video. He said, well, I'll teach you this stuff is because I go the other side. Because I know what you are going for. So really a very cynical and bad educator, but he was very correct in the way of showing how differently these things actually look like. And you can see what works and what doesn't work because the beauty principle gets completely exposed. What's an ugly zero line reject? What's a beautiful continuation plane on beauty, whatever distinctive difference of price to a moving average. And I think that probably will help you best to overcome some of these uncertainties of, obviously part of it is natural. It's that click that you had all the choices in the world, then you push the button and then you're like, oh, now I'm in the victim position because now I'm in the reactionary mode. And how long will this take and how long does it go sideways? This is a part where it's actually not correct when people say um, the money lies in the exits. I don't know who it was who even said entries are negotiable because if you tweak it nicely, you can have random entries and great exits. That might be statistically correct, but it is from a trading perspective not correct because if you have good entry timing, and this is basically what you spoke of, then this is just the ultimate reward from an ego perspective. It's basically you go in, oh, you're right. This is why I'm fading, because action reaction principle is the most reliable, that it goes quickly, that I don't have to be sitting ducking this thing. Nor does it all the time work because I have other entries too, no. But for the most part, I would say at least 80% of my trades are action reaction based. So you can also filter that if you want to, that you basically trade more dominantly action reaction based to condition the confidence response within for getting financed quicker. That obviously has to do with time of day and volatility, stuff like that. But it's also difficult because these extreme action reaction, you have to catch a trade at the most emotional, most difficult spot. But I think what gave me the most long-term gains is to really look at stuff. So this is just one example of don't sugarcoat it of like, oh, how great all these trades were on the winners. I focus on all my losers. I'm like, why did this not work out? What's obviously most of the stuff is random, so it has not really a reason, but my inability of a harmonious execution style can be targeted by finding why I made errors here or why I have emotional feelings of, because I have them the same like you. If I'm sitting duck, is awful, especially these London exchange 20 minutes after, nicely positioned but not financed yet. And I sometimes sit for hours just to get this financing thing going. Um, but that's part of training as well. It's just not a 9 to 5, and then you go home and your wife serves breakfast. It's just not. Here you already hear me say serves breakfast. That's more like the trainer thing. You work through the night. So try that. I think you will find some interesting findings of how things look very different in their build-up process versus, excuse me, um, versus finalized signals that can afterwards be discussed.
Very interesting. And one another thing that I start to catch on is when you publish your stats. Well, I'm digging out the numbers that are your, say, your targets. I know you guys sometimes mention like set it and forget it, but at the same time you maybe sit the trades as per your last comment. So I'm finding out what is the proportion, what is the, say, risk reward, and what is the amplitude that you guys are designing for your expectation, and that is it's allowing me to see, okay, yeah, it's not risky. It's not okay, I'm expecting like the amplitude of a whole bar or anything like. It's allowing me to proportion my expectations as to.
In my case, this is really simple. That's obviously easy to say. I don't worry about losers any longer. It's just a luxury that I can allow myself to the 90% hit rate. So that's a very nice luxury because worry basically goes away. But I would say the progress to get there is the smaller the stop can be, the better it is. I found in my case that re-entries are more attractive than sitting through larger stops. The actual practical numbers are my average over the last 8,000 trades is 0.5%, a little bit less than 0.5%. So the stops are very tight. Obviously, there are bigger stops or smaller size when it comes to these sub-dollar items or some volatile environments. But in general, my stop is somewhere 0.5%. And from a risk reward perspective, in general, my and this is in general as a rule setup. So my actual numbers are a lot higher, but that's not something what you in your case looking for. But I would say in your case and what I am using as an average rule set, the stop versus the financing target should be somewhere 1.4 or larger. So you should at least make when you have a dollar risk, and you buy at 20 and your stop is at 19, then you shouldn't finance before 2140. So that's very simple application. So I for example have in my spreadsheet a column that automatically uh, uh, after I put an entry level in, spits me out these numbers. So if I'm in doubt, if I, for whatever reason, if the day was long, or if my simple math isn't that great anymore, because theoretically I'm pretty good with these simple numbers things, but if I don't feel confident, I just put that entry level in there, and it spits me out where 0.5% loss would be, and I check on the chart, and I'm saying, oh, okay, this is just not, it's not a trade. But you get very quickly a feel for this if you do this consistently. Like just like Matthew looks at a chart and said, I can tell that the Fibonacci is somewhere here at 50% because you eyeball these things. The numbers is the same thing. You can just quickly tell after a certain while these stops are unattractive here. And when in doubt, I always pass. So if there's not enough time, or if there is for whatever reason, if a little bit of a doubtful thought comes up in my head, um, and obviously you have to be a consistent trader for that, because for some people there's always doubt with every trade. If you're at that stage, then don't do that. But if you're a somewhat confident trader, there's nothing wrong when you pass. You obviously, it has to be consistent, meaning you cannot be that person who just randomly to your mood like select this thing. But let's say if it's something on the verge, if I have a 0.5 stop and my actual stop on the chart would be 0.55 for the size that's appropriate for that play, I'll pass. I just pass. And that goes back to the principle of what we talked before. You do only the stuff that's beautiful, where you don't need to penny pinch, where you don't need to. If I have overhead resistance, and I'm like, will it really go to my financing point, or do I have to cut that finance? I'm out of there. Oh, if it's against the grain, if I have a trend day against me, like a trend day in the making. Obviously, if it's a trend day, it's a given rule anyhow. But if I'm like, if I see that there were two previous entries and I took one of them and now I have the second one, but I'm already anticipating that maybe the third one would be the attractive one where I should really try it, I leave that second one out. And sometimes it's a winner and I'm just not on board. Fine. So I'm not on board. I have always that confidence that there's always a reload and I can always I never FOMO is I have no FOMO whatsoever. I just don't, because I know that the market endlessly every day. Look around at recent trading. The markets are ugly. And still I almost every day have a nice trade. I might have not my 3, 4, 5, 7, 9 trades, but there's always something out there. So it's I don't know. I have been a chef. I'm a trained chef in my youth. One of my professions at that time, and the ultimate thing with with cooking is product quality. If you just get a tomato that tastes like a tomato, or uh, a strawberry that really tastes like a strawberry, or whatever it is, a fresh piece of fish, just don't F it up. That's all you gotta do. And you have great meals. Just do as little alterations as possible and spend as much energy possible for quality. And I do exactly that same principle in trading. I'm not trying to be the acrobatic, and I took this one against the grain, even several down, but I knew that here maybe none of that. None. I'm just driving through town. I bought strawberries yesterday. It's called Harry's Berries in LA. They charge you $20 for a basket of strawberries. It's a Japanese guy who came here in the 60s. And I have to drive all the way to the beach, which I live here at the close to downtown, which is like a 30-minute ride. And I took that ride. Somebody else stands 30 minutes in the kitchen, and whatever, makes a strawberry cake. I just bought those strawberries. And yes, I took that luxury to also pay $20 for strawberries. But when I come home and I bring these strawberries to my wife and my kid, it's a strawberry that when I discovered that strawberry a couple of years ago, I was elated because it reminded me of my youth of, oh wow, this is how a strawberry tastes. I forgot. This guy just took all that effort to protect the strawberry. So that's what I recommend um, for trading as well. Find the nice trades. They're out there, and they're obvious. They jump. By now, I have to say they jump out at me, just like that LTO. That's why I made these examples. Oh, that's nice. Orazio is back. I was thinking I hated what I'm talking about. Good. That's my response to that question. I hope that in part at least answered it.
Excellent. Yeah, I think the theme of the day is endless opportunities. And if that's the nature of market realities, then you can always go to that thought when if you're experiencing FOMO. Well, guys, I think that's it. I think we'll end on a good note here. I think there's going to be some exciting developments ahead. And being that it's a Thursday, we will keep you abreast as the week ends. And you guys know where to find us.
And we will try, as usual, to keep you at the right side of the market. As Matthew always so nicely said, I didn't want to have that lost for today, because I love it when you say that, Matthew, because that's true. We
That's
try
what
to
we
keep you
do.
on the right side. That's what we do.
Yeah, we keep you on the
Okay,
right side of
guys,
the market.
thanks a million. I truly appreciate your time. You know where to find us.
All right, guys. Adios. Take
Thank
care.
you, guys. Bye.
Thank you.